Hello and welcome to the Trading Zone. I am Joe T. Gay, Equity Armor Investments. Flying solo this week. Brian is out today, so it's just me. Thanks everyone for tuning in. If you're catching it live, remember we're live every Monday at 1 Eastern. So thanks again for tuning in. You got any questions? Feel free to throw them out my way. It seems like everything changed over the weekend, but the markets, maybe not a lot has changed. The same story we saw at the end of the week is playing out again today. So fun to watch as far as market goes as usual. I live for watching the markets and just seeing the reactions with everything. So that has just been the story. So again, I'm Joe Teagay, Equity Armor Investments. Feel free to jump in out there if you're catching me. Say hi. I'd love to hear from you. Big story continues to be, and we'll be talking about this as the show goes on, mega cap stocks continue to do extraordinarily well. Apple stock I've talked about the past couple of weeks got more upgrades, and it's just it's interesting to see this Apple story play out. Yes, they talked about their AI, but they're talking about how it's going to force people to buy new iPhones. This is what I was talking about 2 weeks ago. That finally maybe there'll be some excitement surrounding the new iPhone launches, which we haven't seen in years. So I think that was a big story, and finally the market's catching up to that today. Up another just like 1%. It was up over like 3% this morning. So it's selling off a little bit off of the recent or this morning's high. So for the key events of the week, we have earnings continuing. We had the banks kicking it off last week. We have Netflix, ASML. We traded that last week. Johnson & Johnson, Bank of America, Morgan Stanley, United Health, Taiwan Semi. We'll be trading that later in the show. Goldman, of course, already went, and just trading has been fantastic for them. And of course, we will continue to be on the lookout for more and more Fed speak. The market's pricing it in, though. We got a cut in September, maybe another one in November, and either 3 cuts or 2 cuts by the end of the year. And actually, there's a better chance of 3 cuts by the end of the year than there will be 2. So really, really fascinating to see the markets just move back and forth. And it's so wild how the Fed started the year saying 3 cuts. The market was looking for 5 or 6 in their expectations. By April, the market was looking for 1 or no cuts. The Fed was like, hey, we'll probably do 3 cuts. And now here we are at the end of July here in the market. We haven't gotten any cuts yet. The Fed's still saying, hey, data dependent, yada, yada, yada. The dot plot says 2 or 3, and the market's back to 3 cuts. So it's just fascinating, the trip that we've gone through. So we know last week on our show, we brought up the Mag 7, their overperformance. Potentially that could be a risk for the market. And they pulled back after the CPI, and the market did not pull back. I was saying it doesn't have to be a risk. What really just matters is this trend. This trend has been fantastic, and we continue to be in this upward trend. We have this upward trend line accelerating higher, and just absolutely continuing to crush it here in the market. We have a question here. What we got here? Okay. With the events over this weekend, how do you think markets and volatility will be affected, especially October? Well, the volatility was already in there in October. We had the market, and we had the October futures, and which is the November S&P 500 volatility. It's already super high, about $2 over where the September is. So October, people are expecting a move. And it's kind of amazing how, ever since the debate, actually, the October future has been coming down a little bit. So it seems like that October has been all about that uncertainty. But since the debate, there's been a larger certainty. The probability of a Trump win has gone up, and volatility has gone down. I think the uncertainty has been the driving factor. And maybe oddly enough, like the events of this weekend make it even a less uncertainty At least that's what the market's thinking potentially right now. So I know a lot will change again, and we will expect more surprises. Hopefully nothing like we saw this weekend, but we should expect some unusual events to happen out there. Oh, more questions. This is great. We got questions here, guys. How risky? Yeah, that's what we were talking about last week. How risky is it for the markets in the Mag 7 are heavily weighted in the S&P? Yes. This can be a problem with index investing. It's a benefit of index investing. It's also a problem. The market cap of the winners continue to go higher. Their weighting in the index continues to increase as they go up. And we saw concentration narrowing as we saw the Mag 7 just have a tremendous start to the year, and their weighting in the index just kept getting bigger and bigger and bigger, which led to a risk if there was a pullback in a lot of these stocks of driving the whole market with it. Well, really amazing to see last week after the CPI market pulled back. The market did not pull back. The Mag 7 pulled back broadly. All the growth stocks all the best winners of this year pulled back, but the liquidity was there. Money was put back to work immediately, right back into the small caps, and there was a bit of rotation. We'll get into that as we get into the show, but it was just tremendous to see the liquidity, tremendous to see that people don't want to have cash on the sideline. They want to put their money to work. Everything wasn't sold in unison. So it's not what people were predicting when they were saying, hey, there's too much concentration here in the market. So really, a really good sign for the bulls, just to say in a nutshell. The skew is another thing we're watching every week, and it's continued to stay low. We're definitely on the lower end of the range here on the skew. We're continuing to get increased call buying here. So I think is another sign that the bulls are still in control in spite of maybe you could call it a hiccup last week. But again, the charts are going to be telling us everything we know, everything we need to know. The trend is still our friend. We're still going higher with everything. So that'll change as the trends will change, and we'll have a good idea here. You're welcome, Jack. Thanks for the question. Another thing we look at every week is the VIX term structure. We are again in blue. That's where we are right now. Interesting to see the front month is below the spot. So maybe people are expecting there was a little bit of premium after the assassination attempt put on the volatility spot. Maybe it's going to come back down as the week goes on. Give or take. That's really fascinating. But you got the second month, the August future here is way higher here. We're up close to 14 in the August future. So big premium there. We're kind of getting close to the August being the front month anyways. So there's big premium there. People are expecting maybe that volatility to return to normal. Remember, we still got this October future way above the rest of the curve here. It's going to be on this next week. It's going to be on this chart next week. We're going to see it kink higher on the VX3, and it's driving all these other volatilities higher. Remember, volatility is a ripple effect. Volatility in one part of the market will make its way in waves to other parts of the market. The closer we get to October, the closer we get to the election, we're going to see these waves coming all throughout the markets and just affecting things you don't think that are related. So that is something we'll be watching out for. And we're going to bring it to our big story here, which of course is the Russell 2000 catch-up. So small caps way behind the game for the past couple of years. They've gone basically nowhere, while the S&P 500 and NASDAQ have enjoyed a tremendous run, to say the least. And they've got some room to catch up. They've got a ton of work to do, but I really like this little breakout here. They're above this trend here. Gotta love that. Gotta love being above there, and I think making a test of the all-time high that we saw back in 2021 is in the cards. It's very plausible here, which would just be great news for the small caps, and it's just a sign that the economy is just doing fine. It's kind of chugging along, and it's also a sign maybe the AI trade. Yes, it made sense that the AI trade started with the mega cap. It started with the biggest tech companies of the world, but I think that kind of will filter out through the rest of the economy. There's benefits for all sorts of companies all the way through. So it's really still potential there. So broadly, this is just good for the health of the economy, the belief that everything is going to keep on going, and we're not going to see that recession that we've been talking about for so long. And I don't have the answer exactly why. Usually, when you see interest rates spike high or get the Fed trying to slow down the economy, usually that's what you see happen. That didn't happen this time, or maybe it still will, but it hasn't happened yet. And the only thing I can say that's different is the amount of government spending, the amount of money the government is spending right now dwarfs what we're used to. So maybe this is just in the new norm. And if that is the new norm, can we expect interest rates to stay low? We'll see, because the amount of liquidity just seems to be so present. I mean, liquidity, you can just see from last week's action when we saw that sell-off in Nvidia and the biggest names of the market, that it was quickly bought up. The money was quickly put back to work. Liquidity was just totally there. So it's just maybe a sign that there just is a lot of money in the system. So is inflation really going to go away? Can the Fed really lower rates? And if they do happen to lower rates 3 times by December, which is what the market is pricing in, are we going to see more inflation in 2025? We'll just have to wait and see. But bottom line is the market is saying nope, no recession. The economy is great. And that's the end of the story. Let's bring it to the stock of the week. That's going to be none other than Taiwan Semiconductor. Look at this chart. Just a fantastic run in 2024. This is another name we've been talking about on this show all year long. We've been saying, hey, this is going to be part of the AI revolution. This is a big player in it. Last week we talked about ASML. They make the machines that Taiwan Semi uses to produce, and Taiwan Semi produces the chips for NVIDIA. So bottom line is, if you believe that the people who are buying NVIDIA are right, and they don't, you could say NVIDIA, the buyers of NVIDIA are right, but they're too early. That's one thing, or they're right and it's going to keep on going higher. That's another thing. If either of those situations are true, that the buyers of NVIDIA are right, then it's going to show up here in Taiwan Semi. They are making those chips. So they're going to sell them. They're just basically, they're sold out as many as they can produce. There's no limit to the upward amount of chips that they can make. It's just, whatever they can make, they can sell, is essentially their business right now. So it is just all about that. How many chips can they make? And it just made perfect sense for this trajectory. Now that we're here, now that we're up from 60 to 190 in about a year and a half, is there room to go higher? I'm not necessarily saying there for sure is, but it just made logical sense as the year was going on. This is going to be playing catch up to NVIDIA as we go here. So that's just what we saw. So my trade on Taiwan Semi of the stock of the week was be as an owner of it to buy right it into earnings. Now the volatility is a lot higher than the typical move here into this earnings event. We're looking at a 7% implied move by Friday. Usually on earnings, we need to have much more muted, just fasting to see. I think the market knows the production. They know how much they will have made. It's just all about their guidance, I think, which will move. We have had a little bit slightly larger moves lately, but none of the moves have been that large following earnings. So I like selling some volatility into this elevated volatility capping off some upside. That's fine. The all-time high is about 194, 193.97, I think is the all-time high. So selling this 190 call, which would be getting me out of Taiwan Semi above an all-time high, I think that is perfectly reasonable. I get to collect $5.50 right here, which of course that means that if we do go lower, I will not experience the loss, as much loss if we do, because I get to collect that nice juicy $5.50 premium on this trade. So I think that's a nice trade for me into this earnings event. We also looked last week at the JP Morgan ahead of earnings. Just a quick update on that. Nice little trade. Looking to buy basically an at the money call and sell an upside call. Nice winner here. I think it'll continue to run. I think financials actually look very strong right now. So I really like this action. And also Apple, I mentioned it, put this on, I think it was a month ago now. So put it on a month ago for 2.25. It went against me. I doubled down, went up in a big way, and doing it again today. So just loving this trade, and thinking very, very happy thoughts about Tim Cook and Apple as we go. Okay, so that's all I got for today. Really big thanks to everyone for tuning in. Thanks to everyone who had a comment today. Means the world. And yeah, just have a great week. I look forward to seeing you all again soon. And make sure to catch me every week. I'm Joe Teague, Equity Armor Investments, and this is the Trading Zone, sponsored by the MyX.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.